Well, pretty simple. Positive momentum in the Russell 2000. And this is an interesting situation, catching a little bit of flack for this because, again, we saw that annualized number on the Russell. $80 million annualized downturn. I actually was called out on this last night by Josh Brown. The reality is that, yeah, rate hike. So let's see how far this goes. Let's see where the market takes us. Let's see where options are being traded. Let's see where money flow is being traded. We're going to talk about this in about 4 minutes. What I found yesterday, we gave you the runner. And yes, I told you that some things are going to break down, but some things are going to break out. Look at Etsy Go. And we're going to talk in about 4 minutes about one of the most important tools that you could possibly have in having the conviction on names like this. Huge move yesterday on Etsy. And at 9 o'clock, you're going to get the next edition, version 2 of the runner. Good morning, Lyndon. Good morning, Kenneth. Good morning, Fall. Good morning, Dillip. Good morning, G-Man. That's what somebody used to call me in high school. I didn't really like that nickname. Then they started calling me Balls in college. I didn't like that either. Anyway, across the entire landscape of things, just keep in mind, here's what we're going to do today. Morning momentum. What I found. The runner at 9 a.m. And we'll talk briefly about the macro at the end of our conversation. But again, as always, we talk about why we are here in the first place. It's all about market liquidity. And at the end of the day, yesterday, as I noted, as much as we want to be bearish, the positioning was bearish. The Russell ran yesterday. We saw small caps run yesterday. We saw Canagra, CAG, pushing above its 20-day moving average. And I'm trading this SOB. I'm going with the 19 up to the 21. I'm going to trade this so long as it is above its 20-day moving average. That's your first trade idea of the day. Don't tell me I didn't give you any ideas today. CAG to the upside, looking out into 2 weeks. Let's go 19.21 on the spread. That's our first idea of the day. But again, why are you with us today? Because is this a trap or not? And I looked at the way that this broke out yesterday and the way that I feel it's probably going to be another good 10 days of just burn. It's very, very difficult to short this market. It's very, very difficult to be pessimistic when liquidity continues to expand. And yes, we are heading into a Fed event. There will be repositioning, but there has been a lot of unwinding of short positions, certainly on the short squeeze side. And again, pay very close attention to this chart. This tells you everything you need to know about the markets right now. Regional banking stocks are getting off the ground for the first time in a little while. Good week and a half coming off that backside, breakout to the upside. This is why we trade around the 20 and the 50-day moving average. This is why even when you feel the ultimate darkness, oh, everything's going to go to hell. Well, everything just turns right around and you use the moving averages as points, pivot points, which is so critical. Rosario just joined us. So did Shane. So did Connie. Good to see everybody. And we're going to take you deeper into this in this day. But before we bring in a very special guest in 1 minute, I want to point out momentum. Look at that. Minus 34 all the way up to 6. Stocks moving higher. Russell 2000 now back in positive green territory. As I said, I didn't think we were going to be here that long. And I do get the feeling that if this does break down, I'm with Brandon. This can go down to 205, 210. But for right now, momentum remaining strong. Feeling at this moment is, oof, that gut feeling. Oh, yeah, I want to go short. I want to go short. I want to go short. But the technicals are telling me otherwise. And you have to be patient. I think we're going to get there in September. And I'm going to show you how to navigate that relatively soon. But first, we bring in the man, the legend, the guy who basically gave me the insight yesterday when our runner does come out. It's right there, everybody. Look at this. Look at this move yesterday. Look at Etsy yesterday. And that run and that pop, 62 up to 66. I saw it on Brandon's scanner. Brandon's joining us this morning. How you doing?
Good. How you doing, Garrett?
I'm doing great, man. I spent a little bit of time. I've used what you're talking about over the last week. Started digging into the things that I'm seeing with conviction, and then I say with utter confidence yesterday, yeah, really bullish around Etsy. Look at this move.
Mhm.
Very, very strong move yesterday. We had a 7% move. We had a couple other things that were on your scanner yesterday. What is it that you're seeing right now that I think a lot of other people are not?
Well, what's interesting is that as I was doing my mastermind yesterday, and then we went back at the last half, going over the scanner, going over the console, and again, just walking through stuff. There was a bunch of stuff that printed like the last hour and a half
Mm,
before the close, and it's stocks like Etsy. Well,
right.
what is Etsy? Etsy is a stock that has over 20% short interest. It's days that covers over 3 days. And so you saw it with Etsy, you saw it with SMR, IONQ, you saw it with Bloom Energy, BE, Rocket
Coles,
Lab, RKLB,
Coles.
AEO. I mean, the
Yeah.
Sydney Sweeney
AEO.
stock now.
Yeah.
I'm like, all these high short interest stocks, you saw them hit it like in the options market before the close, and it hasn't necessarily moved all these stocks, but they're definitely stocks to watch today.
So as we look at a company like Coles, and I'm sharing that right now, I'm showing the screen. You have this massive move. This actually popped up on August 8th on your screener.
Uh-huh.
And I mean, seriously, everybody pay attention. A move from $11 to $13 doesn't seem that much mentally in your mind. But when you're focusing on options trades and you're
Yeah.
focusing on the cyclicals, the idea that to me, when I see something like this, you see big institutional money that is effectively front running the CPI.
Yeah.
It feels like they knew something.
Well, it's one of those things that I mean, you have these stocks have very high short interest levels. So you have institutions, hedge funds that are short the stock. So what do? They need to hedge themselves. So they go out and buy 3,000 calls, right?
Right.
10,000 calls as a hedge. But that hedge has built-in potential because the market maker is selling the calls, they got to buy stock, and it just puts pressure on the stock. Then you get the retail frenzy stepping in, and then all of a sudden you have this powder keg. Yeah, and again, a stock moves 20% overnight. Those options go from like, go 200, 300, 400%. Sometimes you'll see them go up 1,000% just overnight with these big moves like that. And I have a theory that the options in these kind of companies where you have real two-sided risk going up big, down big, the options are really underpricing these moves. And so it provides an opportunity to trade call spreads or just buying calls sometimes.
Well, that's exactly the point, is the fact that some of these things are mispriced. So if something should be versed, I think we call ourselves TheoTrade for a reason. If something is supposed to be priced at $1 and it's priced at 60, what type of upside? I mean, it's simple to me. I get it.
Mhm.
But like, explain in real terms what mispriced options means to a retail investor who can take advantage.
Well, I mean, you can see it. So if you take Don's expected move, now I have a version of Don's expected move where you can that Kenman made for me that you can adjust the multiplier. So for example, I can change the multiple from like 1 times to 3 times. And then all of a sudden you see stocks that are hitting that 3 times the expected move, 8, 9 times in a year. Well, that's not statistically viable, right? I'm
Right.
like, 99.5% of the time it's just stay between those bands. And these stocks are consistently popping above it. Why? Because there's massive short interest. You get short squeezes, but the options market hasn't caught up yet. After the move happens, the option pricing's there. So there's some value in spotting these moves early before they happen. Again, looking at that big hedge that's put on potentially, and the idea that hey, this could really drive the stock up. So with some of those like Plug and Coles, and I'm going to show one today again
Hmm.
that again this scanners, this the consoles popping up with these companies, and like I said yesterday, SMR, IONQ. You mentioned obviously Etsy, BE, Rocket Lab, RKLB.
Yep.
I mean, those are a few that yesterday popped up in the last hour and a half before the close, where you saw some big call activity.
You and I were chatting the other day. We were talking about the potential downside for the Russell. And all of a sudden, we see things show up in ghost prints that are suggesting, oh, small caps ready to run, small caps ready to, move to the upside. You're like me. I look at the data. I have my own behavioral views
Mhm.
of the market. I think that we should be trading at a level that is much, much lower than this. How do you manage, the behavioral elements of like your own psychology of thinking, yes,
Yeah.
this is too stretched, but then seeing the data tell you something different?
Yeah, so that's where you can't afford to stand on your losers,
Mhm.
right? I mean, So for example, I mean, ARC, it's going to
Yep.
be a loser.
Yep.
We got 3 days and it's got to go down a lot.
Yep.
But here's the deal. I can't stand on that, right? That trade is gone.
Right.
You have to move on, right? You have to be able to transition. And that's where, I think about when I think about ghost print activity and the console, it's hard for people because you go to one, it's like the book, Who Moved My Cheese,
Right.
right? You're accustomed to go to one stock or a handful of companies and it doesn't work and you keep going there until you die, right? You have to adapt. How do you find new places? So yesterday we went bullish in a couple areas. We saw big activity, SLV, and Pinduo was one that had a lot of call option activity. But I did K-Web instead, a little bit more liquid. The strike offerings better, but it's one of the top holdings. And so the idea is you got to find ways to start to eke in and go bullish. Now we had an XLF position last week. We're up 90% on.
Mm-hmm.
Now we're basically break even on it because we got in early. I still feel good that financials are coming down, but obviously financials are lifting small caps, which they're a big percentage of IWM. But that's the thing is you just can't stand and lose and wait and lose confidence in yourself. You just got to keep moving forward and you got to be willing to take the next trade.
100%. And you and I did not coordinate on our outfits today. I assure everybody with the blue. But the key thing right now, as you look at this, I think it's a very difficult environment for people to feel very confident about small caps because of what has occurred over the last couple of months, particularly in consumer defensive. Mm-hmm. You're seeing something different. You're seeing these moves that traditionally you would be probably bearish on, but your data is saying something different. You're seeing upside at least in the short term. Where do you view the market going, into September and October, or are you just focused on the next 2 weeks?
Well, so here's the thing is that the pain trade right now, I think for institutions is the upside. So I think we saw last week, they're probably they're getting short, right? We're trying to take short positions. And the idea is that look, I mean, you look at volatility. Everything from a volatility perspective that I look at suggests we're looking for a significant increase in volatility in the next 30 days. Well, we also saw that in the prior 30 days. Mm-hmm. And so again, that kind of signal is pretty reliable, but there are times again where the market just keeps grinding it out. That is the pain trade to the upside. So if we break, we'll break hard. And I would expect that again, through this most bearish time of year, we'll see a break at some point. Maybe it's September. Maybe it's tomorrow. I don't think we really necessarily know when, but certainly by mid-September, statistically, that's where you expect to see it. And maybe towards the end of August here, we'll start to weaken. But institutions are definitely hedging. They're pricing in higher volatility. The question is, again, you take bearish trades. I think it's reasonable to do that now. But
sure,
the pain trades the upside. You got to be able to go with that as well and start to balance that out and give yourself a little time to be wrong in the near term.
You and I are going to be chatting today at 2:00, but I want to really highlight this. I'm a person who's always looking for some sort of edge on how to utilize high short interest stocks. Mm-hmm. And now I'm looking at your screener and now I'm seeing, oh, this is the time to go in on Kohl's. This is the time to go in on Hertz. And it's moving faster than the traditional analysis that I do on the 20 and the 50. So you and I are going to be chatting today at 2:00. What should everybody expect?
Well, we're going to be able to kind of walk through. I mean, again, we have kind of the old way of doing things and we have the new way. The old way was pretty laborious, mm-hmm. right? I mean, so most people aren't going to necessarily go into the Thinkorswim scanner and go layer after layer after like peeling back the layers of the onion. You're not going to do it, right? And sometimes you become emotionally invested in a print that you analyzed because you spent 5 to 10 minutes doing it.
Right.
There's got to be something here, right? Nah, you just got to move on. So with the Ghost Print Surveillance Console, what we're doing is we're really allowing you to really find accessibility to these prints. And then you make the quick decision of whether or not you want to trade it or not. 100%. Right? You don't have to become emotionally invested. Just move on to the next one.
It's all about
this
conviction.
As clear as I want it. Okay, move on to the next one. Yep. My goal for people is get 10 prints a day, find 2 to 3 trade setups a day, and take 2 to 3 trades a week.
This is the whole thing. It's all about conviction. And I have a lot of different tools that I utilize to build my conviction. But honestly, I think you have one of the best concepts and one of the best tools possible to say, yep, I got to hit the print. And that's exactly what I'm always looking for as a trader. So Brandon, thank you so
Thanks,
much for
Garrett.
joining us this morning. I will see you at 2 o'clock,
All right.
and we're going to move on. But thanks again. Anything else you want to add?
No, we'll see you at 2 p.m. Eastern.
All right. Thanks again. Talk to you in a bit.
Have a good one.
All right, everybody. 9 o'clock. Brandon, listen, join this. Get in on this. I've been a TheoTrade since March, and I've been looking at the conviction that I'm looking for when I want to make a trade, and having this, I just sit here and I go, oh yeah, that's why Etsy's up 6%. That's why KSS is up the way it is. So do me a favor, join us today at 2 o'clock. Brandon and I are going to have a great conversation about Ghost Prince, the new surveillance scanner that he's offering, and we will continue to dig deeper into the things that matter. It is 9 o'clock, which means one thing: runner time, everybody. So, once again, I'm going to say this time and time over and over and over and over again, okay? You're only getting this for the next 20 minutes. There is no, can we get this back? And if you are watching a replay of this, I apologize. You had your shot. Maybe just check in with a phone. Maybe do something, whatever it is. I can't give this back. But we're going to dive into right now what our strengths are. Netflix in the continued mode. And I'm only doing one stock. I'm only doing one stock on the runner. This is volume 2, volume 1, number 2. I think we got this wrong. I don't really know how journalism works anymore. NFLX. And we've been talking about Netflix with that breakdown, that pushback above that 20-day and that 50-day moving average, combined with all of the things we are looking for, positive on RSI, MFI, MACD, ADX. Yep, you get the sell-off after earnings, and eventually somebody says, yeah, I'll buy that at 1136. Looking for continued strength, looking for a move back to 1300. There are a couple other stocks on this list. There's an airline company. Yeah, got to check it out. Trek FSK. All right, so we dig a little bit deeper into this with Trex. What's happening here? Well, Trex is popping around, and even though the weakness is there, here is that 50-day moving average. Here is some conversion on that or a reduction in that MACD, but the volume remains low, and that is a concern to me because of the industrials. With the way that I would be focusing on this is if we get back up to that 20-day or we get it back up to that 200-day, fade it in the other direction. The volume is not there, the MACD is not there, and we still remain negative on that ADX. We're going to be scanning this and watching this for the next couple of days. Again, industrials is very, very difficult because we are going to be cutting interest rates into a weakening economy. And if you need proof of the weakening economy, I will be bringing this back up in about 7 minutes, and I'll show you exactly why we are facing a weakening economy. Finally, I'm going to just talk about the airlines. Just go to Jets. Look at the global ETF. We had this pop yesterday on the Jets stock. Momentum remaining strong on stocks like Delta. Delta, nice move up, pushing to that recent near-term high. I like the idea of trying to at least run this to 60. And one of the nice things about making a trade on stocks like this is that there are different ways to trade it that you can reduce your downside. If you see a move like this and you feel any level of optimism, and it is hard to maintain optimism, keep in mind that you can utilize options to your advantage. So if you go out 1 week, 2 weeks, 1 week's fine. Why not go out 1 week? And you were to buy in the money at 56, right? Delta is currently at 58.70, and you were to sell at 58. Again, I'm going to show you the math behind this. You're going to bet $130 to make 70. Your max return here is $56. Okay. What are we doing here? We are actually playing the spread in a unique way. I'm going to change the math on this because I want your math to be better. Let's go 55, 57, 57. That's how far down the stock has to move. All right. Your break even on this trade is 56.48 It is currently at 50.70. Okay. And we're going to look for that 20-day to keep creeping up. You are looking at a 35% return in the next week. Yes, they're going to be in focus, but 70% return probability of profit, 35% gain, 148 to make 52. Here's the most important part. If this stock sells off, if this stock moves to 57 in the next 5 days, this is your downside, 17, 14. The moment you get into next week toward that expiration, it moves higher. So 57 becomes your line in the sand. You're trying to make 35%. You're trying to, your worst case scenario is the stock pulls back to 57 and you're out of the trade. High probability trade, nice return on risk, 35%. Look, you don't have to make 100% in every single trade. But if you're looking for an idea and you want to be even more risk adverse, then go down to 53. You can do this. It's allowed. You go to 53 and you go to 55. What happens here? 86%, 15% return, and your break even is 54.73, which now takes you to the 20-day moving average. It's all about using what the market is giving you. That is a nice momentum pop. You could then just go right back to the 20-day moving average. Once again, you're now at an 86% probability of profit. And in the event that this does sell off, once again, $57, 10% loss, 8% loss, 6, 5, 4. By the 18th, you're in the green. It's all about understanding the mathematics behind this, putting up 173 to make 27. And I want you to understand what we're trying to educate you on here. We want to teach you how to use what the market is giving you. Now, some people don't like high probability trades. I like taking what the market gives me. If I can make 16% in the next few days, and it is the next few days, my annualized return here is 570%. That's something people brag about. That's things that people put into term sheets, put into PowerPoint presentations and say, hey, look at my returns. This is a very important way to look at the market, because if you can build a trade around those very specific moving averages, which are very important technical levels, take what the market is giving you. High move on the RSI, improvement on the MACD, improvement on the MFI, improvement on the ADX. It doesn't seem like a lot of money, but here's the key thing. What you're trying to do every single time we talk about this is create new liquidity. You want to make 15, 16% in the next week or break even. Don't lose any money, but very important, if you get that 15, 16%, you now have new capital that you can use to trade on those really high upside types of trades that we talk about trying to maximize. We want to constantly give you as much opportunity to create new capital that you can use to trade. That's why I always go back to closed-end funds. It's why I go back to the midstream companies. I want to make 7, 8% in new capital that I can use to trade. And these are the types of things that become very simple trades for us to try to create even more capital. And then we leverage up and then we really take a shot at something big. That's the way to think about it. I think that there are a lot of people who read newsletters, who watch shows. They want the 100% gain at a 3% probability. My argument is different. What if we can create 7% that we can leverage into 18% and then take that 18% and then push it across the table? And also invest in things that actually matter, like utilities, like pipelines, like infrastructure. Those are the things that will provide you with the necessary capital to be successful. So if you look at the most recent trade, the idea that I'm giving you today, the trade that I'm saying, you know what, I'm going to do this, okay? And that way somebody will stop yelling at me saying that I'm not giving enough trades out in the morning. 53 to 55, August 2nd, 22nd. I'm going to buy the 53. I'm going to sell the 55. I'm going to put up 173 to make $27. And I know it doesn't seem like a lot, but it is 15.6% with a high probability of 87% probability of profit. 54.73 is your break even, which is right back at the 20-day moving average. I can run with that. And I know exactly what the potential downside is in this event. If we hit 57, I'm going to lose 15 bucks. Cool. But if we make it to the upside, I'm going to make 27. I'm always willing to lose $1 to make 2. That's the view of the runner. That's the view of what we're trying to accomplish here. On the other side of this, with a couple of minutes left, I want to talk just about the cyclicals, okay? We talk about Want. Want is the ETF that I am constantly watching on the cyclical side. You know that I love to trade Tesla, but overwhelmingly, this is Amazon and Tesla. That is the consumer discretionary bull ETF. 47.87. Cyclicals are on the move. So how do we turn around, look at the screener, and analyze what are the stocks on the cyclical side that have been beaten to hell that could potentially reverse? Well, a very simple way to analyze this. Look for the companies that are in the cyclicals. Look at the technical side. Look at the fundamental side. On the technical side, look for stuff that is oversold right now. There's a lot of them. Restaurants, Kava, Fat Brands, Funko, GT Tire. Okay. Up 1%, pushing that 50-day, 200-day moving average. We get above that 200 moving average, or forgive me, pushing after that downside. You are now oversold on your RSI and your MFI. This is a reversion trade. This is one of those stocks that, yes, it got its teeth kicked in. What you're looking for here is a move back to 9. The other thing that you can do in this environment, which is wonderful, is you can take a little bit of a step back and analyze the fact that this stock really kind of gets stuck in that $7.50 to $8 range. So what do? Sell spreads to the downside. Go out a couple of months, look at the 6, look at the 5. Sell the 6, buy the 5, and look for some sort of move here that would effectively enable us to take this stock at an even lower price after this recent move. Now, we haven't had a chance to really assess or analyze what insider buying looks like. But if I go out to October or I go out to December, I can sell the 6 and I could buy the 5. And why do, forgive me, sell the 7 and buy the 6? Why do I want to do that? Well, again, you've got a company that's beaten to hell. You've got a company that's trading at 5-6 times earnings. You've got an EV to EBITDA under 6. This is almost private equity territory where this should actually be taken over. If you look at this, if you look at this trade, I'm putting up 80 bucks to make 20 with a break even of 66.8. Why do I love this trade? This is my favorite structure in the market. Anything that I can get. I know that a lot of people don't think about selling premium, but I'm talking about an 80% probability of profit on a 25% gain. I'm putting down 80 to make 20. Doesn't seem like a lot, but use the leverage. And the point that I'm making is I'm willing to buy Goodyear Tire at these metrics, by the way. Price to book 0.47. Price to sales 0.13, PEG 0.33, EV to EBIT under 6. This is stupid. These are real things that are needed in a real economy. So I'm willing to buy this stuff all day, 20% less than what it is right now. And I will be paid to do it right now. 70% annualized, 25% return, 80% probability of profit. And in the event that the stock breaks down for whatever reason it is, I know right now what the math is behind that trade. If this pulls back to 750, I lose 10 bucks. If it breaks higher, I make 20. This is exactly the point. 1 to 2, 1 to 2, 1 to 2, all day long. Other horses I want you to watch today as we move into the end of the day, GBX. I want you to watch Greenbrier. We've got this stock that has been bouncing around. It has these nice squeezes around that 20 and 50-day moving averages. Boom, boom. We get above that 50-day. Buy the railroads, everybody. APAL. APLE. Forgive me, not good at not a little dyslexic this morning. Here's the breaking moving averages. Again, use that at the 12 on the stop, and again gap, which once again I continue to note, you're seeing these moves on the consumer cyclical stocks. Look at what happens when it can break all of its moving averages. Very high movement, very, very significant downturn, 28 all the way to 20, down to 1870. I think we can get right back to that 200-day moving average. These are the things to watch right now. To wrap up our last 5 minutes very quickly, I just want to point out a couple of things. One, rate cut optimism. U.S. inflation in July came in softer than expected. We got this yesterday. It was easing concerns and boosting hopes for a Fed Reserve cut. That is evident in the CME watch, right? CME Fed watch, CME group. You see 99.9, everybody. It's completely priced in. This is a little problematic because when you get to the point where everything is stretched and we guarantee a rate cut, well, if that rate cut doesn't come, we have a problem. But all eyes now need to be on the October move and the expectation around whether or not we're going 25 or 50. We are currently pricing in 25 basis points in September, 25 basis points in October. I will argue and I believe that they're going to go 50 in September. I just have this odd feeling that things are starting to get priced in, and we're going to pay very close attention to whether or not people start making this bet over here. I just have a hunch. I'm not going to be aggressive about it, but I do just have this in the back of my mind that sometimes when this level of political influence is possible, if we have a bad jobs report and a very bad inflation report at the end of the month that would suggest that deflation really is kicking in, I do see a possibility of a 50-point cut. And I honestly think in the next 2 to 3 weeks, that narrative is going to start up again soon. If we go out to December, you're seeing a 60% probability of moving to 75 basis points, which again, 75 basis points, which again is very significant, right? We have these concerns. We look at the current market. The question now is how are they going to support the labor market and how are they going to provide support to ensuring stability, not just on the inflation side, but also especially on the jobs market. So this market can burn higher for longer, and that's very, very difficult for people to recognize. We're at 99% now. The TLT in focus, the KRE in focus. Right now, KRE moving higher. I just simply say ride the momentum. See if we can get back up to that 63 level. Buy in the money here at 60, sell up here at 64, and in the event that it pulls back, cut it 10, 15, 20% stop. Very, very simplistic. On top of that, as we move further into it, the 50 basis point cut is exactly what the narrative will be shaped around. Scott Bessent's already now called for it. A 50 basis point cut in September, setting the slow job growth despite the inflation remaining in check. The key point here is Bessent has already called previously for a shadow Fed chair. And I don't know if it's him. I don't know if it's Mirren. I don't know who it is, but the reality is the infighting in the Fed is going to start picking up, and resultantly, you're getting the political pressure. It doesn't mean it's going to happen, but the political pressure is there. And as a result, it heightens market expectations for aggressive easing, reinforcing that risk-on sentiment that I have discussed. As I have said time and time again, it's all about liquidity, and I think you will see a lot of false confidence in the next week and a half built around names like this. ConAgra has been beaten up a couple of months. Just that little tiny move above that 20-day moving average, enough to give the technical traders confidence to try to at least ride this back up to the 2025 level, see if we test that 50. But I feel like this is an environment right now where it is going to be risk on and everything is on the table. So pound it hard, take advantage of what this market is giving you, pay attention to the SPY, look at the DIA, Look at the REITs, look at the utilities. The utilities have been amazing. On the ticker side, before we hand it off to Don, CoreWeave dropped 9% despite solid revenue due to that wider than expected loss. Key thing with CoreWeave, one of the strongest 13D stocks I have ever seen in history. So many insiders, so many managers, so many hedge funds going in all at the same time. And that gives you the preview for tomorrow. We have the 13D, 13F deadline, happening tomorrow. I am going to spend my entire day on Friday walking people through what to expect with the insider moves and the 13Ds. Lots of institutional support. We're going to see where money is rotating after the second quarter. I anticipate that it is going to be an absolute frenzy on the backside of that April sell-off. We're probably going to see a lot of money into a lot of tech, but we're also going to see a lot of things into the core things that matter. This could be a very good next few weeks for consumer defensives if the hedge funds and the people like Warren Buffett and the people like Bill Ackman were buying that dip in April. Pay close attention to Kava Group, which got its head kicked in. Once again, looking for a reversion on that. Intap, absolutely running today as well. Pay very close attention to this for a possible sell-off as people take profits. And Webtoon Entertainment, don't know what you do, 13% run after announcing a Marvel Star Wars content partnership. I don't have time for this. All right, it is 9:22. Yep, got that number right. We're going to wrap this up. I hope that everybody has a wonderful day. I'll be back at 12:30, and then I will be back at 2 o'clock because I'm just going to be here. I'm going to be trading actively. We're going to make some trades today in the Tesla Mastermind, and we're going to be focusing on the F and Gram score stocks as well. I hope that everybody has a great day. Don's coming up in a moment. He's going to play some music. See you in a little bit. Have a great day, everybody.